Hello traders, good morning, good afternoon, good evening. Bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend, wie geht's? For those of you who are new to us, we are the TS MACD Pro Traders, and our website is www.dayprotraders.com. The title of this video is MACD Reloaded Part 6. If you have not watched MACD Reloaded Part 1, Part 2, Part 3, Part 4, Part 5, you may do so before watching Part 6. Very important. So you may understand what we are talking about. Okay, this week, okay, has been the MACD Pro. Okay. And on the hourly chart, we are looking at the pound, dollar, British pound, dollar currency pair on the hourly chart using the hourly MACD 2059. Okay, I don't want to go deeply into this. I've done it already. So moving on. Yesterday we were here. Yesterday was the 20th of September 2012, and the price was retesting the media line of this channel. This is the top of the channel, and this is the base of the channel. And the price was okay, coming near the base of it. In fact, was going down before that when I start posting the video, the MACD Reloaded Part 5. Okay, and you can see it was going down. If you look carefully here, price start going down after retesting the media line right here. You see right here, you retest it here. Price display a low, a lower high, but failed to display a new lower low on the hourly chart. What is it telling us? It's telling us that the bearish momentum is weakening because there was a validation of support level here. You want to watch the first video that we have posted on our YouTube channel, www.youtube.com/George Trio. The keyword is George Trio. A validation of support and resistance level, the key for successful trading. You may want to watch that video and understand what is a validation of support level. So as the price retested the media line, it started going down. The bearish momentum was pushing it down. Price display a lower high. You see, there was a high, a lower high, a lower high. But here the price failed to display a new lower low, telling us that the price, the number one indicator, communicating to us that the bearish momentum is weakening. Now, as the price rolling up, we want to watch it carefully. The retest of the base of the channel here, as I explained to you, you see the dotted line, this spotlight here. The price was trying to retest the base, and you see, first time it touches here, okay, push it down, but failed to display a new lower low, because it must display a new lower low to confirm to us that the bearish momentum is increasing. In the meantime, okay, price went back again a second time to retest the base of the consolidation, and this time rolling it down. But this time, ladies and gentlemen, something very interesting has happened. Instead of displaying an equal low like he did here, he displayed a higher low. Ladies and gentlemen, the music has changed. Why? There was some news also yesterday regarding China, that China will support the Eurozone, China will invest in the Eurozone, blah, 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 blah. Okay? And the market start going up. Okay. This is about, okay, the trading triangle, how the news, the fundamentals, and the leaders can change the dynamics of the markets. We'll come back to the trading triangle very soon. So this was the story. So you see our green bearish channel, which I was telling you that it will be better if you want to sell, not to sell in the void like this, but to sell on the air. You see here, some traders did sell here. You can see sell here, but you will know that you have to be careful, because as the price display a double bottom pattern, which is the validation of the support level, if you are selling here, you want to watch it carefully, because prior to the retest of this green bearish trend line, the price validated this level as a valid support level. We cannot disregard that. All right, but the confirmation of the increase in the bullish momentum was here because the price displayed a higher low, and we went above, okay, the base again, and this time it was blah 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 blah. And also plus the news regarding China yesterday. China is going to invest in euro. China is going to save the euro. Ladies and gentlemen, take it from me. China must save itself first before saving the euro. This is nothing to do about politics or whatever. The market is fractal, okay? There was a recession in Great Britain, United States. As I explained to traders before, there will be recession in Eurozone, which has started now, but the Eurozone recession will be mild because as the economy in United States and Great Britain start recovering, that will help the Euro recession, which will be mild. It won't be as steep as it was in the United States and Great Britain, all right? Okay, but because the market is a global market, talking about money flow, you know, whenever economy is prospering, it's because there's the money pumping into that economy, investment coming, money returning back to United States because there was outflow of finance into China. Nothing wrong with China people or the politics or blah blah blah. It's just money flow, money returning back to United States. We will see a contraction in China. This is about the market stable data that stated that the market is global and there is no market isolated somewhere else. Okay? Alright? And also, the second stable data is that the market is fractal. It's fractal when we are talking about technical, it's fractal also when we are talking about the fundamentals. There will be a kind of contraction in China. So, all this story about blah 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 blah, the China will come and save the euro. Yes, it's possible, but China will be busy, okay, restoring order, okay, in China, okay, to support the economy. But the best thing is to allow the market to play its own pattern. When do you need to invest? You need to invest when the conditions were right, okay, not just pump money into the market when the conditions are not right. It's like you want to sow, ask the farmer, they will tell you there are seasons when you sow, there are seasons where you do not sow. It's not because you have seeds that you just go and sow anyhow, any season. I mean, it's up to you. Blah 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 blah. Enough of my own blah blah blah. So this is what has happened yesterday. So what has happened, ladies and gentlemen? Let's go back again to our. In fact, you can see here my hourly MACD. You can see finally crosses above its signal line, telling us that the price now must be returned above the simple moving average 20. And also you can see the price pop out of the bearish channel. When you see that this, do not rush, wait for a pullback. There was a kind of small pullback here, and then you will take a better one here. Today, this was a news driven again today, right here. Why? It's the pound dollar currency pair today. A gorgeous news for the UK economy, United Kingdom, Great Britain, okay? All right, there was a gorgeous, beautiful news, okay, for us, all right? Public sector net borrowing, okay? There was a reduction, nearly 1 billion reduction in the net, okay, borrowing of the public sector. Gorgeous news, all right? The forecast was 13.2, but look, 12.4, less, okay, burden on the public sector. Gorgeous for the economy of Great Britain. The market responded, talking about the trading triangle. You see how the fundamentals, the news, and the leaders can change the dynamics of the market instantly. Instantly, all right? So, I mean, I'm doing like this, not to annoy you, okay, but just to get your attention, all right? All right, instantly. Because suppose there is some news affecting Google stock, affecting Apple stock, affecting IBM stock, affecting ExxonMobil, it will move the market. All right? Economy news can move the markets. Okay? 1 second, please. Answer this question. Now, and also the fundamental, you want to trade stock, so that's what we are saying. The market first. All right? Talking about the market first, it will come back to it, ladies and gentlemen. It's coming back because I've answered the question. The screen must go blank first because of other program on my computer now running. My apology for that. Okay, let's go back to business. So as I'm explaining to you now, okay, when we want to trade any financial instrument, our eye is constantly on the market first, which is the S&P 500. All right, so as I explained to you last time, the video that we posted on www.stochasticmarket.com, you want to go there and click on today's page and watch the video, The Secrets of the S&P 500. I was telling trader that the market is approaching a very important resistance level 1500. We cannot discount it because of the trading triangle. The market approaching a very important resistance level. We need to be very defensive, protecting our gains, securing our gain, and being very defensive. All right, in the proper sense of the word defensive. All right. So this is what we said. So yesterday there was some blah 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 regarding China, and also as you can see today, the news regarding the economy in Great Britain has changed the dynamics, and the price continuing the movement to the upside. But you can see, though the price went up, there was no violation of the price structure. This is about the language of Elliott wave. The price structure was not violated because, in fact, as I was mentioning to trader quickly, we were in the fourth wave. All right, we were in the fourth wave. The market was in the fourth wave, which I'm going to talk about because I promised that today when I'm recording, one second please. I'm doing something here. 1 second please. All right, done. All right, good. So we were in the fourth wave. Okay, so as I promised to traders that today when I'm recording this part, I will talk about the wave principle. Very simple principle that the market will move in 5 waves, and will correct itself in 5 waves. 1 2 3 4 5, 1 2 3. First wave, second wave, third wave, and fourth wave and fifth wave. The first, the third, and the fifth wave, these are what we call the impulsive trend, impulsive move, or a trending wave, a wave that is trending. Now, the second wave and the fourth wave, that's what we call corrective wave. Well, you can say it's like a consolidation wave, a wave that is not trending, So 3, impulsive wave, 2, corrective wave. When we see 1 2 3, for us, we think of correction, When we see 1 2 3 4 5, without overlapping of waves, we think of, impulsive waves, But when we see 1 2 3 4 5, but waves are overlapping, we are thinking of corrections, So the impulsive wave, the impulsive wave do not overlap, all right? But all this to do with the language of the price, the number 1 indicator. Probably you have been using Elliott wave without even knowing, all right? And the triple green signal consistently, will catch, the third, Elliott wave. Let's go back to business, ladies and gentlemen. So what has happened? Talking about the trading triangle, we are talking about the market phase. I want to show you quickly the S&P 500, ladies and gentlemen. Bear with me. We are talking about trading. So the S&P 500, as I post the video on our web page, today's page on www.stochasticmarket.com, talking about the secret of the S&P 500. I was telling traders that we were approaching, you can see the price yesterday went to the zone of the highest yesterday, this week, from last week to this week, the price went even up to the zone of 1467, As I explained to traders last time, with the weekend, I was saying that we are 35 pips short of the 1500, a major resistance for the market. So we need to be very careful. Again, going back to the trading triangle, the market is the S&P 500. You can be in another city, in another country, but remember, even if you are trading commodity or you are trading anything else, the market is the S&P 500. That's it right here. The inside triangle, which are called the heart of the trading triangle, the leaders, the news, and the fundamental. For the Nasdaq 100, we know Google and Apple dominate that market. You want to know, you can go to www.dayprotrader.com and be busy to understand the market leaders, how they influence the market. All right. So you see now, so in this case, we are talking about news, how the news has changed the dynamics of what we are trading, but the price structure, talking about the pound, British pound, and the dollar currency pair, the structure did not change. Talking about the wave principle. Suppose you did not know anything about wave principle, as I was telling you yesterday, Understanding the language of the price, that in a downtrend, the price might display, okay, lower highs, lower lows. Here, it failed to display a new lower low, but in fact, give us a higher low. You don't want to sell anymore. You are very careful. You are very careful. Now, you may sell if you want to sell, but you are more careful than anything else because you can see here it starts changing. Where are we now? That's a very good question to ask as a trader. You see my turquoise line, I don't want to talk about it anymore. We can extend it. Yesterday we extended the pink one, you remember? Yesterday we extended the pink one, and we noticed that this was on the dot how the price was touching the pink one. Let's extend our turquoise one. I'm not going to change anything. The line is here and it's changing. Let's extend our okay. You see how the price came back again to retest again the turquoise trend line. Another hot spot trading zone. If you want to know more about the hot spot trading zone, go to our website, okay? www.dayprotrader.com, www.stochasticmacd.com. Our main website is stochasticmacd.com. We have other website which is www.dayprotrader.com. So right here, you see how the price went back again? Yesterday I was telling traders that the price was moving from one hot spot trading zone to another hot spot trading zone. All right, you see, price moved from the pink one to the turquoise line. Now you see how the price moved now, deep below it. Now it went back again to retest it. Yesterday I was telling traders that though the price found a resistance on the median line of this channel here, all right, the price did find a resistance here, the median line, and was going down. The smart money will prefer it to retest the turquoise trend line. You see the spot is still blank here. You see? But because the price went down first and displayed this blah blah blah, double bottom, higher low, okay, high probability trend, alright, the price now slowly but gradually, stubbornly, the smart money want to retest that turquoise trend line, which the market did not retest before. You see how the smart money talking about low risk entry point? Now we have retested it. Price is going down, price must display lower highs and lower lows. If it fails to do that, it's no more bearish. Language of the price. So, talking about Elliott wave, where are we, ladies and gentlemen? Talking about Elliott wave. Alright? Where are we now? Okay? That's a very good question we have to ask now. Okay? Where are we now? Talking about Elliott wave. I'm going to go now to the daily chart. Because on the daily chart, things become very clear. On the hourly chart, because we know a wave on the daily chart can be divided into 5 waves on the hourly chart or even on the 2-hour chart. A wave on a higher degree can be divided into 5, okay, minor wave or 5 sub-wave on a lower degree. The fractal pattern of the wave principle, okay, that's what we are talking about. If you want to know more about the wave trading, you need to go to www.24elliottwaves.com. The guideline that I recommend to traders talking about practical Elliott wave trading without cutting corners, consolidation, breakout, first wave. First wave must not be cancelled. Here, you see, price went down. Looking on our left-hand side, okay, when we are trading, there was a down move, and then we have a consolidation here for the pound-dollar currency pair, and then now a breakout. If you look carefully on all the candles here, I'm going to highlight before I move on. Let's highlight this consolidation session here. I'm going to bring this line down a bit because you can see that there was the price went up to this level, also up, but I'm more concerned about 90% of the price movement. There will be those who understand the Bollinger Band, deviation, so I'm concerned about 90% of the price containing within that consolidation zone. That's why I move the white line down to contain, you see the price went out a bit, I don't want to move it all the way up here. Same thing we do sometimes when we are drawing the Fibonacci retracement and the Fibonacci projections. All right, so there was a consolidation here and then we have a breakout. You can see the breakout happens here. Some may say to me, George, the first wave started from the top, but it did not start from the top, because you can see there was the first green candle followed by another green candle followed by the third green candle. It starts from here, not from the top. Though some traders may say, some traders may draw it also from the top. Nothing wrong with that. They will draw it from the top of the line. If you like, we can color this line. Okay, in blue. All right, to highlight, okay, the range of this consolidation. Some traders may draw it from here and say this is the first wave. I disagree, because you can see there was one green candle, second green candle, third green candle without interruption. Okay, but even if you made a mistake, you will know later on, because there will be some discrepancy or some confusion later on. Even whenever you are confused when you are counting the wave, you know that there's something that were not right. So do not be afraid to start drawing lines. Okay, so you can see 1, 2, 3 candle, pop it from here straight away. But you can see there was a green candle here, but was interrupted. Okay, some may say, okay, George, in fact it's somewhere here and it has been divided into 5 waves. All right, that's your count. Okay, so my count is first wave here and the second wave here. Okay, on the daily chart of the pound dollar currency pair, because I have some traders that are very serious about wave counting, and I cannot let them down. All right, so and then I don't want to remove any line because of what was happening here, and then I'm going to color them. And now a fourth wave, it's going to be very difficult to draw line. We are now in the fifth wave. That's all I can say now. What I'm going to do now, the segment, I'm going to start coloring my okay. Now I'll change that. Use my lovely turquoise. That's my first wave. And the second wave, I will color it into green, beautiful green. And the third wave, this time I'll color it into black. And the fourth wave right here, I will color it into pink to please the ladies. Okay, now there was another pink one here before, so to avoid confusion, I will use let's use green again. Okay, I have some green lines here, so green will not be good. Because of the background of my chart, I need to, okay, I'll use blue again. Okay, I don't have much choice now to highlight, so I'll use again a black again. So that's my fourth wave, and the fifth one also, I will color it again into black. Okay, okay, let's use I'll use again black. Okay, that's fine. So that's my count. Okay, first wave, second wave. The second wave must not cancel the first wave. If this is the case, we must restart counting the first wave. Any wave that has been cancelled, we must restart counting that particular wave. Okay, so and then a third wave, and then a fourth wave, and a fifth wave. My apology to traders. I want to leave my line intact on my chart so I know what is happening. Okay. So we are now in the fifth wave. That's all I can say now. What I have done now, these waves that I have counted can be divided, okay? Can be just, let's say this again. 1, 2, 3, 4, 5 is not yet completed. We are still in it. 5 waves on one time frame can be a single wave on another time frame. Let's go from the daily chart. Let's go now to the weekly chart. On the weekly chart, what do we have? The consolidation zone that we have highlighted on the daily chart is still here. So this is the consolidation and a breakout. So the 5 waves that we have counted on the daily chart is in fact just one wave going on the weekly chart. That's all I can say. I'm just keeping my eyes wide open without assuming anything, following the price. I can't deny it. Price went down, there was a consolidation, a move to the upside. That's all I see now. It looks to me a wave. 1, 2, 3, 4, 5 green candle. This one is not yet completed. Okay, so it's a bullish wave. Okay, until we see if it has been cancelled, we will restart counting it. So I counted 5 waves on the daily chart. It happened to be only one single wave on the weekly chart. Okay, let's be more curious. It's our own chart. We can be curious and draw on it. You see, become messy because it's my own chart. So I can do it. On the monthly chart, what do we see? The price display a double bottom here and blah blah blah. Not, you see, another double bottom, a higher double bottom, a double bottom here, a higher double bottom pattern. The price is consolidating on the monthly chart. If you look carefully, the blue, you see the blue highlight. We are now above that consolidation session, the bigger consolidation. You have to understand that the top blue channel is from the daily chart, but we have a bigger channel on this monthly chart. From here to the top here, we are above that channel. So it's a consolidation, blah blah blah. That's why price was finding resistance here. There's another level. The price is moving 5 waves from one support level to a resistance level, or the price will go down from one resistance level to a support level, or the price can correct itself from one support level to a resistance level, or the price can correct itself from one resistance level to a support level. So we want to know those levels. So we may see, though I counted 5 waves, that's not the end of the whole thing. The market may decide to push it up to this level. The top one, you remember the 7 waves, talking about the Australian dollar, US dollar currency pair. You see recently how the news has changed again, the dynamics of that currency pair. The trading triangle do not be a technical trader alone, combine technical and the fundamental. So there are 2 levels. Though we have counted 5 waves, there is what I like to call a beta resistance level. That's what sometimes you will see what we call extension of wave. Extension of wave is due to the rejection of one price level. So traders say that that's the end. I have counted 5 waves. I must sell now. That's the theory. But it's theory and practical things are different. So though we are here now, we must not also discount the media lines of each channel. Now we get into the mode of a projection of a channel. As you can see now, what we are talking about is not only plug and play like a robot. It's more to do with keeping eyes wide open and learning, just to draw a line, and use common sense. Price move from one support level to a resistance level. You want to sell at a value resistance level. Price move from one, resistance level, move down from one resistance level to a support level. You want to sell, you want to buy a support level. But you don't want to buy when the price is going down on a higher time frame. Alright? And also you don't want to buy in front of a resistance level. You prefer it to break above it, retest it, and turn around. Blah blah blah. Same thing. So now that we have counted 5 waves, do not forget there's a beta resistance here. Let's find out. This level here, 16469. We are not saying that it will definitely go there, but we just know that there's level, a beta resistance at 16469. If we reach that 16469, we will look up to this one here, 16704. That's it. But if we stop here now, it start going down, we'll do the inverse, looking for the support level, key levels. That's what we do. So now this is a resistance zone also. We do not forget there's a resistance here. See these 2 candles, the green one followed by the red one. Price changing direction here on the monthly chart. It's a key level. That's where we are now. You see, that's where we are now. You see, that's where we are now. So though we have counted a 5 wave on a daily chart, does not guarantee or give us green card to go and sell anyhow. But we can perfectly keep our eyes on the ball, the price itself, without forgetting the trading triangle. As I explained to you today, there was some excellent news regarding the UK economy, talking about the pound dollar currency pair. the public sector net borrowing has decreased, which is good news for the UK economy. All right. So you see now, it's all to do that when we are using one market stable data, we don't want to violate another one. All right. In exactly 26 minute time, because the time now in London is 4 minutes past 2 p.m. in exactly, okay, and in 4 minutes past 2 p.m. London time, and 4 minutes past 9 a.m. Eastern time. In exactly 26 minutes time, New York will be open. This is another stable data. We don't want to violate the opening bell. You see, so learning to trade and okay, and doing it properly. The key point is to make excellent decisions, but also to make money. All right, you want to make money, you don't want to lose, so that's why you want to select the low risk entry point. All right, so we have counted 5 waves. Okay, so what was happening, let's go back again on the hourly chart. Also yesterday when we were recording the video that we call MACD Reloaded Part 5, we draw some line. Did you forget that line? Okay, we draw some line yesterday, and we were talking about it was on a, I think it was on a daily chart instead. Yes, on a daily chart we use our Fibonacci retracement tool from here, and I was telling you to pay attention to the 50% and the 61.8% Fibonacci retracement level. You see the first one, if you remember yesterday, in the zone of 161 50, in the zone of 16150, the price went down. That's the 23.6% Fibonacci retracement level of the move from here, of the third wave from here to here. We were highlighting the 23.6% Fibonacci retracement level, which is in the zone of 16150 zone, but the price went down to 16163 zone, not too bad, near the 23.6% Fibonacci retracement zone. That's why it changed the direction. That's why we had the double bottom pattern on the hourly chart. All right, we also highlighted the 38.2% Fibonacci retracement level, which is this one here where my cursor is, and also the 50%. We want traders to watch those levels as the price was rolling it down. All right, but the price did find a support on the first one, which is 23.6% Fibonacci retracement level. The next thing that we want to know, talking about hedge fund traders. Hedge fund traders use the Fibonacci projection, Fibonacci extension, and the wave principle with the pitchfork tool, of course. All right, but it all comes down to support, resistance, trend line, and channels, nothing else. So we can keep it very simple. So now we can use a Fibonacci extension. So price went up from here to this level here. We will do the inverse, bring it down. What I'm going to do, that's not what I want to do. I will remove this line, because we can see, we know now what is our first wave. First wave is the turquoise line, followed by the pink one, followed by the green one. Okay, so we will use now our Fibonacci retracement tool to know how much profits traders took after the first wave. They have taken the 61.8% profit, 61.8% profit from the first wave. So the price went up and came down to the 61.8% Fibonacci retracement zone. The target zone, trader will tell you, it will go to 138%. Some will say 150%. Some will say 176%. Some will say 161%. Some will say 261%. Blah blah blah. All I say to traders, keep eyes on the price. Draw key levels. The price will go from one hot spot trading zone to the next hot spot trading zone, as we have seen it already on the hourly chart, how the price went back to retest the turquoise line on the dot. But that line happens to be exactly in the zone of a 261% Fibonacci extension zone. The point you want to remember when you're using the Fibonacci extension is just draw them and watch the reaction of the price at those key levels. They are not magic level. Do not force it, but just watch it. All right, so the price went up from here to this level here. To draw with this software, I want to draw the extension. I will draw it the opposite. Instead of drawing it from here to here, I draw it from here down to this level, and I have my projections here. If you look here, the 138% projection is here, the 161 is here, and the 261 is the top one here, the dotted lines. Now I'm talking about the dotted lines. If you like, I can color them now. What we do, we can color them in a different color so you can see them clearly. Okay, I will change it. Let's use turquoise again. I hope you can see it. The horizontal line, dotted horizontal line. Okay. All right. So this line below, you can see here. This is the 138.2% Fibonacci projection zone. If you watch the reaction there, you can see some traders try to sell here. These aggressive Fibonacci traders that are allowed to call crazy traders. All right, nobody's crazy though, but we can call them crazy traders. You can see that they try to sell it here, and also this one. Okay, the 161%. That's where I'm putting my line now, horizontal line. Here they didn't bother to sell anymore. They are fed up. Okay, 161% Fibonacci projection zone. If you want to know about the Fibonacci, go to www.dayprotrader.com. That one was taken out, and the price went into the zone. Now this is 261%. That's what we are now. 261% Fibonacci projection zone, which is equal to this hotspot trading zone. I say to traders to locate the hotspot trading zone, because the hotspot trading zone are previous, okay, a Fibonacci or key levels. All right, that's where the price will change direction. So when you are using the hotspot trading zone, you are in fact using Fibonacci key levels or important price level. All right, you see the 261 is exactly this level. It's a hotspot trading zone. So if you are using a hotspot trading zone, you will make excellent trading decision. Look at where it's a 261 is also here, the horizontal line below this one. The price did change direction here on the daily chart. You see here, it's a hotspot trading zone. So if you are somebody who is drawing lines, you will know that it's an important level also. Talking about 138, where trader was selling here. Nothing to say here on this chart, but you can see that the price changed direction. They also went up to that level here, went up to it, and then changed direction, up and down. It's 138, same level. So if you are using the hotspot trading zone, you can dictate the key levels: support, resistance, trend line, channel. 3 channels, nothing else. Now we are in a rising channel on the daily chart. All right, let's go back again. So this is about the Fibonacci projection and extension. How the market was so obsessed to bring the price to the 261% zone. These Fibonacci projection zone are just key levels trader will pay attention to. If you are using the hotspot trading zone, you will detect the key levels. All right, let's go back again to the hourly chart. On the hourly chart, we have our hourly MACD 2059. Because this video is about MACD reloaded, MACD crossing above a signal line is telling us that the price must be above the simple moving average 20. MACD crossing above the zero line, the price must remain above the simple moving average 50. These are MACD stable data. Right here, the price crosses above the zero line. All right, right here where you see MACD crosses above the zero line and also above the signal line. I do not put the moving average at 50. Okay, if you like, we can do it now. Put them on this chart now. The simple moving average 20 and the exponential moving average, okay, 20. I will put first the simple moving average 50, which I will color into yellow. Make it a bit thick so trader can see. That's the yellow line. That's the simple moving average 20. So here was a harmony between MACD and the price. Price crosses above the simple moving average 50. MACD crossing above the zero line. Next step, let's now bring it's not always like this. If you are watching the MACD reloaded video, you understand how this works. So all right, it's there for you. www.youtube.com/George Trio. If I put the simple moving average at 20, moving on. The understanding is the most important thing. I've done something else. That's not what I want to do. Okay. My apologies to traders. Moving on. Moving average, not MACD. Okay, moving average 20. This time 20, not 50. All right, I will color it in green. Okay, hold on, please. The green line is the simple moving average 20. The yellow line is the simple moving average 50. As you can see, the price above the simple moving average 20, rise in simple moving average 20, and also above the simple moving average 50, right here. Now you see, all right. But we are also at a key level, a hidden support level. In fact, this was not hidden because on the daily chart, we see that we are at a hotspot trending zone. If you were not at a hotspot trending zone, the 261% will be a hidden resistance level, because the Fibonacci extension sometimes we highlight, okay, hidden support and resistance level, resistance and support level that are not, okay, now exposed on our chart, but sometimes the Fibonacci projection extension will highlight those hidden support level. What will happen, this is what we call a convergence signal. If you receive a sell signal here, we will sell, because the Fibonacci traders that were in the trade will be happy to take some of their profit, which they start taking now, somewhere more of them here. This was a news driven to propel the price. In fact, they were desperate to retest the turquoise trend line that we have drawn on the hourly chart. Here, they didn't touch it here when I put the highlights since yesterday. Now they bring, that's why I was telling you yesterday that smart money is so obsessed to sell at the best place, and they don't like it when traders are selling anyhow. As the market forced it down here, they were so desperate to retest that. That's the orderly market. That's what I call orderly market at a low risk point. If you are dealing with millions, you want to take risk at a low risk point. They are not gamblers. They are not excited. They are very calm but focused. All right, and we want to do exactly the same thing. All right, exactly the same thing. All right, we don't want to place any money unless we know that there's something in need for us. What in need for you? Okay, all right. You want to know. You want to know what you're going to gain before you gain. So we counted 5 waves. Okay, and also we use the Fibonacci projection and also the Fibonacci extension. We are now at a hot spot trading zone. What's going to happen? That's a very good question. What's going to happen, ladies and gentlemen? That's going to happen. All right. So what do? Language of the price. Higher lows, higher high. We know that's going up. Equal lows, equal high is okay. Is consolidating. All right. I want to put a big. It's a zone, so I put a bigger one here, bigger hotspot trading zone here on the edge. Look at that, beautiful, on the edge. Down. Now they bring it back again. If New York's open, okay, the traders that come into the market for the first time, as the market open, they will also, if the market is going to go down, they will also like to sell at the best place. That's why it's so important sometimes to wait for the market. You will see sometimes traders will start selling, and the market will open. The price will go back again up first, and then it will go down. Okay, because everybody in the smart money, they will not sell anyhow, and they will sell at the best place. And you can be very patient, and you can understand. Sometimes traders are taken out of their trade, which means they lose some money, but they can get their money back quickly. All right, sometimes if they know what has happened. Okay, so I hope you have enjoyed this video about okay, you learned something from it, that you can improve your ability to trade. Okay, all right, and enjoy your trade. For those who are TSTW traders or TS MACD Pro traders, you have any question, please send them in. Do not be afraid. Traders can send, if you are TST trader, it's your right, okay, to send me a chart. Like I said, send me the chart for the, okay, if you have the yearly, send me the yearly, quarterly, okay, monthly, weekly, daily, hourly, whatever, and I'll look at it, okay, and That's how we can do it together, building a new team of traders. The strategy is not we trading for traders, but traders working together, sending the ball back to the traders, trader working, something you do not understand, something you want to clarify. We are here, to assist you as a TST trader, all right. It makes sense, and it's also powerful. The time now is 19 minutes past 2 p.m. in London, ladies and gentlemen. In exactly 11 minutes time, the ball will start rolling again, the bell will ring, and we will be ready, to start trading. It's time to eat something now, ladies and gentlemen. I wish you the very best in your trading, and until the next time, enjoy yourself and be very happy. As you have seen, we have talked a lot. We haven't said too much about MACD, but this is about MACD, reloaded, part 6. Speak to you soon. We are the TS MACD Pro traders.